So, hi everyone, I'm Johnny Valentine. I'm a CTO at Thinco and I'm on the board of Insurtech UK. And today we've got a very cold edition of a fireplace chat with, or fireside chat, however it is, with David and Ian from Corniche Growth Advisors. So great to have you both here. So I think before we get started, if you could introduce yourself to everyone, what your past is, what Corniche is, and how you got started.
Sure. Perhaps I'll kick off. The interest in Insurtech, I think, is something that's been brewing a while. Both David and I are originally engineers, so we've got quite strong technology backgrounds. But 20 years ago, I headed off to do an MBA, believing that corporate finance was my future. And that got me onto the road of corporate finance. And about 5 years ago, we had sold a business that I was a shareholder in to a UK listed company that was going into the insurance technology world. And and as a result, I got interested in the Insurtech world, which was just emerging. So that included companies which today, like 360 Global, ICE, which was bought by Acturis, and others were within the group. Which made it quite an interesting learning experience. And David and I got together shortly afterwards, and one of our focus areas is Insurtech.
So maybe just to introduce myself, David Keast. As Ian says, I'm also an engineer and also an MBA like he is. I actually embarked on my entrepreneurial journey at the age of 35. So I was in the corporate space, mostly electronic software and media. But 35, I decided to head out, and I co-founded a broadband provider providing two-way satellite services in West Africa, which we sold to Dimension Data PLC, which was listed on policy at that time. And then more recently, founded a global mobile payments company in Switzerland, which we sold to Symantec Corporation in 2014. So I've co-founded, funded, built, and sold businesses as a principal. But after that last gig, I was not really keen to do another startup. But I felt like I wanted to help other companies grow in ways that I could. And hence, and I wanted to be involved in that startup world still, without being in a startup. So hence, Ian and I got together about 4 years ago to start Corniche.
That's really interesting. Just so everyone's aware, Thinco worked with Corniche on our Series A that we did last year, and I spent probably 2-3 times a week on Zoom calls with you two, and I didn't know that background. So thanks for that, both. That's really interesting. Now, obviously, I've got a list of questions about Insurtech related stuff. That's what we're here for. But I'm just interested. We're here on a Zoom call. There's 3 of us here. Ian, you're in South Africa. David, you're in Surrey, I believe. So how's it been during the last year or so? Obviously, you're both from South Africa working together, but actually like this.
Yeah, maybe I'll go first then, Ian. Actually, I mean, the business has picked up big time. So I think you've seen the data around how investment in M&A has picked up. And it's certainly been the case for us. When the lockdown hit, there were the naysayers, as there always are, and we just kept our heads down and kept working, and things got better and better. So it's been great, and I mean the Insurtech space we're quite active in. Another interesting theme is South African companies who are internationalizing, who are looking for international fundraising. That's turning out to be a great theme for us as well. But the reason we joined the Insurtech UK is we're building a nice sort of track record around Insurtech and getting to know the space much better as well. So it's been good.
Yeah, in fact, our skill sets, John, are our focus area, is into the Insurtech as a subset of fintech and telecoms. And for both of us, this is just a confluence of all of the growth factors that are currently existing in the COVID, about to be post-COVID world. And it's been hugely beneficial. There have been one or two casualties, by the way. Not being able to meet people has definitely got an impact on being able to raise money. At the end of the day, people like people. And if you only meet them on the other end of a Zoom call, it's a lot harder to put across the good message. And it's a lot harder to make someone believe you that you've got all this skills. Having said that, a lot of information is now available online. So it's all in all, I think we have found it very beneficial in our particular industry.
Well, I'm looking forward to share some South African red wine with you soon, Ian. I got very jealous, especially over the winter period, seeing the sunshine that you had while we were here. And even though it's April, it's still snowing in the UK. So I don't think you're not missing out on much in the UK right now.
Yeah.
Oh, obviously,
actually,
go back
Johnny,
to COVID.
That's probably worth just talking about, because although I am based in South Africa, I'm pretty much based here because I happened to be here when the lockdown happened. It's not, typically David and I move a lot more. We're either in South Africa or in Europe somewhere, UK, even US, where we attend conferences, meet people, and build the business.
I'm looking forward to hopefully getting some real face-to-face conferences, because that's where this real networking can take part. And I'm looking forward to the events we've got lined up this year with Insurtech UK, just getting that plug in. Obviously with the Curry Club, but not always Curry, coming later this year. So it's quite interesting you talk about COVID and meeting people over Zoom and that trust, because obviously we've never met. I know the three of us have never met in real life, yet we've worked together now we worked with you last year. And obviously it's an interesting dynamic. It's a very different one. So I'm going to totally give you a get out of jail free card now. And with my next question, and go, obviously last year you spent a lot of time working with Thinko. We finalized our raise, I think on the 31st, I think, of December, we got it over the line, or the 30th. It feels so long ago now. So you get it. How did you find that working with us? Because I'm sure we weren't the easiest people to work with.
So let me have a bash at that. So I think, you guys Thinko was very well prepared in many ways. The company was clean. There were no issues, and that's not always the case. In fact, we had a call with a client in the US yesterday, and fantastic company, great metrics, great management team, big market, but they've got this this loan which is on a kind of a demand note which can be called anytime. It's not a great thing to have as you're going into capital raise. So that's the kind of thing you need. Sometimes you got to sort out things before you can even start on a capital raising process. But in the case of Thinko, it was clean. There were no curveballs. You guys were great. I mean, you were quite happy to put pressure on us, and we were happy to take it. But it worked out well, as you say, John, because you raised your 3 million at your target valuation with BHL.
And we got we got the perfect partner. But yeah, I think we definitely did put pressure on it. It was, especially during lockdown, it was a very interesting experience. So I'm interested, you said that the company you spoke to yesterday aren't the things that make someone not ready for a capital raise. So what are the things that people have that kind of make you go, no, they're not ready yet, or they shouldn't be doing it?
It can be anything from a cap table that needs sorting out, a regulatory issue that's outstanding, that needs, that especially in the Insurtech space, you see that sometimes, where, on a review, on a sort of regulatory review, it turns out there actually can be some issues which absolutely need to be sorted out before. So that's the kind of thing. I mean, also, if you're working towards a capital raise, you've got to make sure that you've got milestones where you are validating things that are meaningful since your last raise, assuming you've had a raise before. You've got to stage it and work towards that towards that point. So in a sense, what I would say is the earlier you can engage with an advisor, the better, even if it's on an informal basis. They can just give you some guidance. So even if you're doing, say, a capital raise in a year's time or whatever, just to give you that sort of And I don't think I think you'll find advisors are happy to kind of provide informal advice just to keep you on that, or get you on that straight and narrow, and ensure that there are no red flags.
Yeah, one of our clients, we'd been talking to for 2 years before we finally got engaged with them, or mandated to actually raise money for them. And it took 2 years, not because they took that long to get ready, but they took that long to get to the point where they felt that they wanted to start talking about it. So I think, people should not assume that raising money is a simple exercise. It's a process, and it's a process down to your core strategy, because your strategy needs to take into account your capital structure. And so that's one of the things that we really pay a lot of attention to. What is your capital structure? How are you going to go about it? Another client of ours, unfortunately, ended up having a down round, and that wasn't at all popular and made it very, very difficult raise, because you can imagine the shareholders want to see their price increasing every year. But there's another thing that I think that's worth mentioning at this stage. It's a favorite story of mine. During a due diligence a few years ago, the company looking at my client, which later became I was a partner in it, was Silver Lakes. And many of you would know Silver Lakes, huge US private equity group, who had just bought Skype. Partner concerned, how on earth did you pay what you paid for Skype? I mean, I thought that eBay was mad, and you guys go and buy it, at an even higher price. And he said, you know what? I know who I'm going to sell it to. 2 years later, ching ching, Microsoft was there with the money. And I think that this talks to the whole story. Don't just think of the fundraise as an exercise by itself. It's part of a coherent strategy right the way through, including and especially the exit. Because if your partner that comes in has got an exit in mind, especially as an entrepreneur, you're hopefully going to be there for the ride. So another important point, I think, worth talking about.
No, definitely, that's really interesting. I think what we went through last year, I can imagine trying to buy Skype must have been a very interesting experience. So obviously there's something that I found last year from personal experience, obviously going through that raise period with yourself. You've got a long list, and that list gets whittled down. And obviously there are good partners and there are bad partners. And one thing I found was that I think working with you two, you helped us get our way through that. And now I'm on the board of Insurtech UK. One of the things that I'm really keen on is trying to make sure that we can pass that knowledge on and help our other members, all of our members, in terms of knowing that way to pass. And obviously this is conversations we had last year. So obviously, what made you want to partner up with Insurtech UK in the first place?
May I, David? So I think that having gone into Insurtech as an industry sector, we really felt encouraged by the opportunity in the space. It just is booming. And when we started to explore further, the fact that there's actually an industry association focused around a new tech, I don't think there's a fintech industry association. Brilliant, actually. And I hope it's going to go from strength to strength. But I think what's key is for what we can bring, and we're absolutely happy to just have random chats with people. We don't have to be paid for every bit of advice we give. In fact, both of us are probably a bit too, keen on giving advice. So
that's a trailer anyway.
You can have that for free. Yeah, exactly. But it's hugely time consuming, raising capital. And I think that you can't get distracted. Your core business, and I think what made you guys successful at the end of the day is the fact you stuck to your core business, which is building your business, not trying to raise your capital. So if we can help people, members of Insurtech UK, then we would be much better off, I believe, as a body.
No, that's great to hear. So one thing that obviously we're working on together now that with Insurtech UK, and obviously we reached out to our members in our partnership forum a few months ago, and obviously you were there as on your first session, and it was great that you stepped up and have offered to help out. Is on obviously this our VC library, which obviously is something we want to launch this year, which obviously getting the views of members and partners on each of the VCs or people who obviously invest in insurtechs. So the horror stories we hear of the bad experiences, but for every bad experience, there's another 5 good experiences with a different company, and it's just about helping those members know hopefully what not to do. So if they don't have time to have a conversation with you, or they are taking it direct, or someone approaches them, that Insurtech UK can offer that kind of quick go-to library to get that advice. So what's your how do you see that working?
Yeah, I think it's a great idea, John, because not everyone has access to an advisor or wants to access an advisor. But this is a tool that can really guide, the members as to who to approach and how to approach even. So we see it as a kind of 2-level database. One is so we know many of the, if not all, the Insurtech investors. And we have our own, spreadsheets and databases of these investors. But the idea is to really do this on a kind of curated basis where there's, as comprehensive a list of investors. And I guess not just VCs, it can be strategics and others as well, who are interested in investing in the Insurtech sector, particularly in the UK, together with their data, what rounds they typically invest in, check size, and geographies, etc. And then, as you say, this layer of members' experiences, and I think that can create a really rich data set to help members help themselves in navigating what is probably one of the most difficult things to do as a startup, is to raise capital.
Definitely, and obviously we don't want this to be slander or libel or 1 star out of 5. They didn't give me any money. They told me my idea was a bad idea. But obviously, so hopefully, what I found talking to other members is that individually we don't have a voice. Some of the strategic investors and VCs are very big, but as a collective, if we can hold the sector to account some more, that and hopefully that leads to some good in industry. So I'm really looking forward for us to launch that later this year. So you talked about, obviously, with what we're doing, the partnership, and obviously on the VC library project, that potentially if someone doesn't want an advisor, they can go on there and they can help themselves. But why does an Insurtech need an advisor?
I think any company raising money or selling itself needs an advisor, and quite simply alluded to it earlier. The focus of the management of the executive ought to be on the business, not on trying to raise money. Most people who've been involved in boards and shareholdings over the years would know that it's a painful process. You've got to manage people all the time. Now you add a third leg to that of newly introduced potential investor, and you've got another set of complications. But I think that the main reason why you appoint an advisor is to have a process to, most people get to sell their house once or twice in a lifetime. Most people get to sell their company once or twice in a lifetime. We go through it every month. And so we are able to point out the pitfalls, manage the issues, help the people. And I think that this managed process is absolutely critical to make sure that you bring along people to a certain point. You've got rigor, because your best mate you met at the pub probably has someone who has invested once upon a time or twice upon a time, or might even be a venture capitalist. And they'll want to, they obviously introduce you to these folk, and it all moves along happily. And then they ask for some information, they ask for more information. What we're doing is we bring a structured process to the exercise. that allows you as the Insurtech entrepreneur to just keep to your business and to get involved when you need to. But most of all, and probably critically, is that it's sometimes quite tough to be arguing prices, arguing terms. And if you've got an intermediary doing that on your behalf, then you'll find that you won't end up with an ugly relationship once they're partners of yours. Remember, they're going to be partners. So that's my view. The other thing is, senior involvement. With no disrespect to the larger organizations, quite often those organizations have junior people running with the actual transaction. And I think what you get with Corniche is this is what you get. You get the senior guys who put the legwork in. We don't hand it over to others. So that's another key thing about an advisor firm, selecting an advisor firm. Make sure that you know who you're going to be working with. And also both David and I have been entrepreneurs. Another key advantage, we know what it's like to have problems with shareholder relationships. We know what it's like when a deal falls over. So yeah.
I think what you've put there is bang on the mark. That entrepreneur, there's a certain mindset that you have to be in, and I think not everyone gets it, and it's definitely very different to some of the people you talk to on the other side of the fence. And I know just from personal experience last year, there was quite a few times where I wanted to tell someone to foxtrot Oscar, but obviously that's where you two stepped in and obviously provided that filter to more politically correct language in order to not disrupt a potential relationship, obviously. Now, you talked about obviously the people on either side. Now, there's two types of the investments. You've obviously got the financial, where they just throw the money in, and then obviously we've got our strategic investors. Now, I know what my preference is, so I'm going to not give my view on obviously. But what's do you think that for a Insurtech that raising a Series A, for example, there's a preference, or is it just about getting the money over the line?
Right. So I think the sort of typical thinking is in any kind of evolution of a startup is get financial investors in early, and then you bring the strategics in later on, either as a Series C, Series D investor, or as the ultimate acquirer. I mean, that's the conventional thinking, and that was the case in Ian's example with Silver Lake, where a financial investor acquired Skype and then sold it to a strategic. But our thinking is that there's actually some merit in having strategics coming in earlier, rather than later. And again, it's probably based on the fact that you've got different types of strategic investors. Traditionally, your strategic investor invested from their own balance sheet, and it was with a view to ultimately acquire you. There could be issues around conflict of interest. Maybe that strategic could be competing with potential customers, and it could also limit your exit opportunities, as well as to some extent the valuation as well. Although some people may prefer that, they may say, we've got a set sort of exit pathway, and all we have to do is march towards that, so it's horses for courses. But the point is, with holding companies and CVCs now also investing as strategic investors, I think it changes the game a little bit. So a CVC is a corporate venture capital firm. They're typically the LP, or the limited partner providing the funding into the fund, is in the sector already. And typically that CVC would like to see some kind of alignment of the strategy of the company they're going to invest in with the LP, so what that means is, but they also have some characteristics of VCs. They're looking at the metrics, they're looking at a financial return. Although fit is probably sometimes more important, strategic fit is probably sometimes more important than some of the financial parameters. So that I would call that a hybrid investor, and you can have them invest, you can extract value from a strategic relationship without being tied, it's somewhat decoupled from the actual strategic company. So that can be a good option. Another one is a bit like your experience with ThinkCo, John, and that's a holding company where they may have more than one company in the sector. So, there's a strategic interest, but it's not sort of one-on-one with an actual investing from a company's balance sheet that that is the actual strategic. So it's also somewhat decoupled. I mean, if I take ThinkCo, where you had BHL invest, they also are shareholders in Minster Law, Budget Insurance, and Compare the Market. And as a result, you can imagine all sorts of synergies, right? So what we find with strategics at an early stage is you've got a good chance of getting better terms than your classic VC, and you've got more potential for value add. So would encourage Insurtechs to think about strategics earlier on.
That's really helpful. I hope that'll clear. I think that's really useful to a lot of our members. So I really appreciate both your time today. I think before we go, I've got one question, and either of you can take this. What's the one mistake that you see most companies making as they approach their Series A that makes you just want to like scream out and go, "Stop! Don't do that"?
Sorry, in their capital raising process or their day-to-day?
Yeah, so companies that are leading up to Series A, and what's the one mistake that people make that's you feel is like a blindingly obvious mistake that people shouldn't do?
Well, I suppose each of us got a thought on that. But mine would be coming back to my point about having a process. If you meet someone in the pub and they say, I'd like to invest in your company, and now you go down a road with them, you're going to find yourself shoehorning them as an investor into your investment, and they may not be the best. So rather starting with what your investment opportunity is, what kind of partner you want, and then go and look for the investor. And I think that for me is probably the single biggest error that I think a lot of people make.
Meeting people in a pub, what do you mean?
Well, we didn't meet you in the pub, so we can't blame that one.
I think we did, actually.
I can't remember what it was like to meet anyone in the pub, so it feels so long ago. I've got London Market booked for next week, though, so I'm extremely excited.
Okay. Well, just to add to Ian's point, so we sometimes have companies come to us having had a bad experience of being led down the road for 3 or 4 months, even longer, and then the investors pulled out and they left high and dry. Then they come to us and we explain the process, and it sort of makes sense in a couple of ways. It's a question of just broadening the net and having lots of parallel conversations. You really, it's a risk mitigation strategy, as mentioned, but it's also you're going to get your best possible outcome. Why wouldn't you want to do that? And also, if you can get some kind of competitive tension going, all the better. And but you're dictating the process, you're dictating the times, you're driving the initiative, as opposed to waiting for investors to come back to you. And you know what kind of hell that can be. So
yeah.
So
that's
that makes sense.
Yeah. So I do want to add one more thing, and that is that the number of people who we embark on a process with, and they don't tell us they're going to run out of money in month 4. Big mistake. You've got to really plan these things so that you're not at a hitting a wall at the point that you're about to raise. You really need to count on the fact it's not going to take 4 months or 3 months or even 6 months to raise money. You've got to know that it's not a defined period. It could take much longer.
I think that's a really helpful piece of advice, and I think obviously relatable for a lot of our Insurtech members. So, David, Ian, I appreciate both of your time today. It's been great to chat to you. I'm looking forward to see you face to face soon. April the 12th is only around the corner, and thank you very much. Have a great day.